My name is Jason Derbyshire. I'm the TradeLog Business Development Manager here with TradeLog Software. And today we're going to be talking about what active traders and investors need to know about wash sales in an IRA. Of course, this time of the year we think a lot about wash sales, especially as they can have a real effect on your trading and your capital gains and losses. But an area that many people don't know much about is wash sales in IRAs. So what we're going to do today is we're going to discuss what are the rules when it comes to IRA wash sales, how do those wash sales affect traders and investors, can an IRA wash sale be avoided, and what about reporting those wash sales for your tax reporting. There's some questions we're going to answer about that. How does TradeLog Software handle IRA wash sales? And finally, we'll have some time for some questions and answers about IRA wash sales. So as I mentioned, if you have any questions, do submit those in the webinar and we'll answer those in the live session. First, let's talk about the rules that are involved for IRA wash sales. Taking a look at IRS Publication 550, Page 59 of the 2012 Publication 550 helps us appreciate some of the rules that affect traders when it comes to wash sales. A wash sale occurs, of course, when you close a trade at a loss and then you open another trade for stock or options on the same security within 30 days before or after the loss. That's the basic wash sale rule. Notice that wash sales occur even if the trades are in different brokerage accounts, and the trade can also be made in your spouse's account, and it's still a wash sale. You may also have another account, such as a corporation or entity you control. Wash sales occur across those accounts as well. But if you notice point number 4 in IRS Publication 550, a wash sale also occurs if you open a position for the same security in an IRA account within 30 days of the loss in your taxable account. It used to be that the IRS was not as specific about whether or not IRA trades affected wash sales, but in the last few years we've seen this point number 4, clearly defined in the IRS regulations. Your trades in an IRA can and do trigger wash sales. Now, when it comes to the handling of wash sales in an IRA, there's differences between a normal wash sales and an IRA wash sale. Now, in normal wash sales, well, actually I should say in all wash sales, the loss cannot be deducted, that original loss that you had from your trading, if there's a wash sale. Now, in normal situations, the amount of the loss disallowed is added to the cost basis of the trade that triggered the wash sale. But this is different. You'll notice, as it says in point number 4, which as we just discussed, is when you have a wash sale from a trade in an IRA. Let's look at a comparison to understand the difference between a typical wash sale and IRA wash sales. On the left side of the screen, you'll notice we give an example of a typical wash sale. Let's say on December 10th, you sold 100 shares of XYZ stock for a loss of $1,000. On the next day, December 11th, you bought 100 shares of that same stock in your taxable account. This, of course, triggers a wash sale. You are not allowed to deduct the original $1,000 loss that occurred on December 10th. However, in a normal wash sale situation, your cost basis for the replacement shares, those are the shares that were bought on December 11th, that's now adjusted. So the original cost basis of $500 is now increased to $1,500 to account for the loss you were unable to deduct. Notice this same situation with just a little bit of a variation. On the right side of the right side column, you notice the IRA wash sale. Again, December 10th, you sell 100 shares of XYZ for a loss of $1,000. This is in your taxable account. But on December 11th, let's say you buy 100 shares of XYZ, but you make the purchase in your non-taxable, your IRA account. This triggers a wash sale. Of course, you're not allowed to deduct the $1,000 loss on the trade on December 10th. But here's the kicker. Your cost basis for the shares that you bought on December 11th in the IRA is not adjusted. That's correct. That is not adjusted. So the cost basis for those December 11th shares remains at $500. What happened to that $1,000? Well, we're going to talk about that here in just a moment as we talk about the effect that IRA wash sales have on active traders. The net effect, and again, in a normal wash sale, you are allowed to defer that disallowed loss. So you can't take the loss at the time that the day it occurred, but the loss is included in the cost basis of the replacement shares. Once you close those shares, essentially you will take the loss. Now, of course, there is always a chance you'll have another wash sale triggered, and you might have to postpone that loss to a future time. But as you just saw in the examples we discussed, an IRA wash sale is different. When an IRA wash sale occurs, this disallows the loss from your taxable account completely. You don't adjust the cost basis of the replacement shares. There's no deferral of the loss. It's absolutely non-deductible. Why do IRA wash sales hurt? Well, if you have losses in your taxable account, you may not be able to claim all of those losses because of the wash sale rules when it comes to an IRA. The result could mean you actually might pay more taxes on capital gains than you actually had. For example, let's say that for the 2012 tax year, I have a net loss of $3,500 in capital losses. However, because of wash sales that occurred in my IRA account, let's say I have $4,500 in disallowed losses. So that means I now have to claim a taxable gain, a capital gain of $1,000. I'm going to be paying taxes even though I actually lost money as a result of my trading for the year. So you see, IRA wash sales can really hurt active traders and investors. So let's talk about then, is there any way to avoid the effects of these types of wash sales? First of all, if you trade the same security in both your taxable account and your IRA, there's a good chance you are going to have wash sales occur. What can you do if you're trading the same security in both accounts? Well, for one, you could try not to open a trade within 30 days after you incur a loss in your taxable account. So again, let's say I'm trading stock XYZ, will be our ticker, and I have a loss today, December 20th. So I'm going to make sure that I don't buy any more shares of XYZ or contracts of XYZ in my IRA account for the next 30 days. Well, let's say you already opened a trade in your IRA account within the last 30 days. Well, it might be too late. A wash sale might occur. But if I did open a trade in my IRA account, then I'm going to have to make sure I don't close any trades for 30 days in my taxable account. You can see that this can be very complex. Wash sales are complex. Even if you try to avoid using the 2 points we have here, it may be impossible to prevent a wash sale because wash sales may have already occurred and it can become a recurring thing in your account. So really the best advice that I've seen from different financial advisors and tax experts, if you want to avoid any potential IRA wash sales, you have to follow a simple rule. You never trade the same security in your taxable account and your IRA account at the same time. That's really the only way you're going to avoid potential wash sales. If you do decide that you want to start trading a security in your IRA, you'll need to wait 31 days after closing out any positions and taking any losses in your taxable account before you make any trades in the IRA. That gives you that safe buffer that puts you past the wash sale window. Again, it's a very challenging thing sometimes, but ultimately, if you want to avoid IRA wash sales, that's what you have to do. We're going to talk next about reporting wash sales in an IRA. There's some different questions that often come up about wash sale reporting, especially when it comes to an IRA, so we're going to address some of these questions. First of all, a question many people might ask, well, if IRA wash sales hurt me so bad, why should I bother to report them? The simple answer is, the IRS requires that you do. The law states that wash sales do occur if you made trades in an IRA. So you are required to report those. Now some might say IRA trades aren't reported in a tax return, so how would I report wash sales? Now what this means is when you fill out a Schedule D, you never report trades that occurred in your IRA account. Nowhere in your tax filing are you usually reporting IRA trades. However, the rules say that wash sale adjustments must be made on your taxable trades. So when filling out Schedule D Form 8949, you actually have to identify any wash sales that affected your taxable trading. Those are indicated using column B and column G on the current 8949 form. So that does have to be reported even though you're not actually reporting the detailed trade history from the IRA. You're simply reporting that the loss was disallowed. Does my broker report this information? The simple answer, no. Brokers do not provide 1099-B reports for IRA accounts, nor are they required to. They also are not required to adjust for IRA wash sales on any taxable accounts that you may have with them. So your 1099-B is very limited in what it reports for wash sales. If you have an IRA, I guarantee you your 1099-B that you get from your broker is not going to account for any wash sales that might have happened as a result of IRA trades. So that might beg the question, how does the IRS know then if I adjusted for IRA wash sales? Well, the simple matter is they may not, but what they call an examination, or as we know as an audit, will reveal. And more in the past few years, we've been hearing about traders who are getting asked by the IRS about their IRA accounts. If you are audited, if you're pulled for examination, they're likely to ask you to provide records of all of your accounts, including trades in your IRA, and they want to check to make sure that you properly reported all of the wash sales, including those that happened in an IRA. A lot of the redefined rules that we talked about earlier that have become more clear in the last few years are a result of rulings that have come down as people have been audited or examined by the IRS and questions came up about how wash sales should be handled. Clear rulings have been released. There's no question now that wash sales do occur in an IRA and you're supposed to be adjusting for those. Some people might ask then, well, if my broker doesn't report the IRA wash sales, do I need to report it to the IRS? And the simple answer again, yes. You are required to report all wash sales. In fact, you'll notice on the screen we took an excerpt from Publication 550, page 60. Here the IRS makes very clear after talking about 1099-B that if you had a wash sale and it was not reported on the 1099-B, you still have to report it and you cannot take the loss. So in other words, even though your broker provides a 1099-B, you can't rely solely on what they provide for wash sale reporting. You have to do the proper work, and the IRS is going to hold you accountable, especially if you have an IRA account. Another question that might come out, if I don't get a 1099-B for my IRA, how do I know what wash sales to adjust? And this is a challenge. But one thing interesting, the IRS has always encouraged taxpayers to keep your own records. You'll notice the excerpt we put from page 3 of IRS Publication 550, where it encourages you to keep records of all of your investment income that you receive during the year. Yes, so you need to keep an accurate trade history. This is why many traders use TradeLog. TradeLog is designed for that very purpose, to keep a history, a log of your trades, and to report wash sale adjustments based on IRS rules. And that's what we're going to discuss right now. We're going to take a few minutes to discuss how you can use TradeLog to keep track of IRA trade history and wash sales. Now, in the past, IRA wash sales were very difficult to handle and had to be manually accounted for and adjusted. It's not an easy task. One of the great new features that we're coming out with in TradeLog version 9.3 is to allow you to track your IRA trade history and also generate tax reporting with IRA wash sales accounted for. I want to show a few key features of this new version of TradeLog. Now I'm going to mention it again later as well. Version 9.3 hasn't been fully released. I know many of you, I've recognized some of your names, have joined us for our webinar a couple weeks ago, talking about a preview of version 9.3, and you may have checked out the beta version. You are able to get TradeLog 9.3 right now in beta release, and pretty soon, hopefully in the next few days, we'll be able to release TradeLog 9.3 fully for all users. And in that version of TradeLog, you're going to see these great new features. First of all, TradeLog allows you to import your trade history from all of your accounts, including your IRAs. The new version 9.3 actually allows you to manage all of your trade history in one TradeLog data file. So you can have a regular cash basis account, you can have a mark-to-market account if you've elected that method, and you can have an IRA account. So all of your trade history is in one place for both your taxable and your non-taxable accounts. So that's important. Once you have the trade history for your IRA, that's what TradeLog is going to use then in adjusting for any wash sales. Next, TradeLog Schedule D reporting accounts for any IRA wash sales that occur in your cash basis accounting. Now, again, this is reported for most of you on Schedule D Form 8949. You'll see an excerpt of that report on the screen. Using that report, you see that TradeLog makes the necessary adjustments. It lists a W in column B when there's a wash sale, and in column G it makes the adjustment amount, the amount of the loss that needs to be adjusted because of the wash sale rule. This adjustment line, or these adjustments, are entered for all wash sales, but including IRA wash sales. Those are all accounted for in the actual tax reporting. Some other great features that TradeLog 9.3 includes: your gains and losses report actually shows you the net effect that any IRA wash sales are having. So in the sample that I'm showing on screen here, you'll notice that I have a very large amount of wash sales that were deferred to the next tax year, but there's $1,765 in wash sales that were permanently lost because of IRA wash sales. So that's a good indicator for me to let me know that I might want to think about some of the decisions, what I'm trading in my IRA account, what I'm trading in my taxable account, because that's $1,700 of losses that I will never be able to claim on my taxes, and that can really hurt. Of course, there's also the TradeLog Wash Sale Detail Report. The Wash Sale Detail Report allows you to really drill down deep and see exactly what's happening to your gains and losses. You can see what trades have wash sale deferrals that are attached to year-end open positions. You can also see after the year ends, you can see any wash sales that are attached to January positions. So TradeLog allows you to drill down and see that information, which hopefully can help you be more educated, more informed as a trader, and you might be able to avoid some of the negative effects that can come from those wash sales. So that's kind of this overview of some of the things with IRA wash sales. Let's review some of the things that we discussed. First of all, wash sales in an IRA account must be reported, and they result in permanent disallowance of the loss. So in other words, if you have a wash sale in an IRA account, it hurts bad. In fact, IRA wash sales can result in increased taxable gains for traders and investors. Avoiding IRA wash sales is possible, though difficult. Ultimately, the only way you're going to avoid wash sales in an IRA is to not trade the same security or options on the same security in your taxable and IRA accounts. You'd have to have a clear separation there if you want to absolutely avoid IRA wash sales. Remember, you are responsible for recording and reporting these IRA wash sales on Form 8949 with your Schedule D. Your broker does not provide you any information about IRA wash sales. They're not going to provide you a 1099 for your IRA, nor will they report wash sales that occurred in an IRA on your taxable account. You are responsible for making those adjustments. TradeLog Software version 9.3 onward allows you to track your IRA trade history and also adjust for any IRA wash sales. Now, a couple of points that we want to address, FAQs that people often ask about IRA wash sales. If I have a loss in my IRA and I buy back the security in my taxable account, is this a wash sale? The answer is no. An IRA trade may trigger a wash sale, but you never disallow losses in an IRA because of trades in your taxable account. In other words, it's one way. Losses that occur in your taxable account could be disallowed because of something you buy or open in your IRA account, but not the other way around. So you don't have to go through your IRA account and worry about losses that occur in the IRA possibly being disallowed. It doesn't work that way. It's only one way. The other question, some ask, if I use mark-to-market accounting for my taxable accounts, do the IRA wash sale rules apply? No, they do not. Traders who have elected mark-to-market accounting with the IRS are exempt from wash sale rules. You do not report wash sales on the MTM account. Now, there is one but with that. Sometimes you might have elected mark-to-market and you may have a main trading account, but you may also have a separate account that's for investment purposes that still uses cash basis accounting or Schedule D. In that case, you do have to adjust for wash sales in your IRA with that non-MTM account. The great news is with TradeLog 9.3, as I mentioned, you're able to keep track of all these types of accounts. A regular cash basis account, a mark-to-market account, and an IRA account. You can keep track of all of that in one place in your TradeLog file. And then TradeLog is going to actually sort through and make the proper reporting. So you don't have to worry about, do I adjust a wash sale here or not? TradeLog handles all of that for you. That brings us to the end of our webinar. I hope you've learned a lot about IRA wash sales and the effect that they can have on your trading gains and losses, as well as good tips on how to avoid IRA wash sales and also how to report them properly. If you'd like to learn more about wash sales and IRA wash sales, we encourage you to check out our website at TradeLogSoftware.com. Click on the Tax Topics menu and choose the option for wash sales. You can also keep up to date with TradeLog news and features by following our blog at blog.tradelogsoftware.com. We thank you again for joining us and look forward to having you with us on our future webinar events. Have a great day.